Amazon Prime's Whole Foods for more visitors. Jeff Bezos is about to one-up your grocery store loyalty program. Today, millions of consumers get lower prices and other perks in exchange for favoring one store chain over another. Starting Monday, Amazon.com Incorporated will lavish its most loyal customers with similar benefits and more when they shop at Whole Foods Market Incorporated, the high-end grocery chain it's buying for $13.7 billion. People who already pay $99 for Amazon Prime's free shipping, streaming music and video will have another reason to renew each year: cheaper organic avocados, eggs and chicken. Tying Prime membership to grocery buying habits plays squarely into Amazon's strategy of selling all things to all people. While likely boosting Prime's membership rolls, it could also induce a broader range of customers to stop more often at Whole Foods, a company that has a reputation for being too pricey for many shoppers. Part of what Amazon is trying to do is translate that higher frequency traffic to Whole Foods, said Mike Levin, co-founder of Consumer Intelligence Research Partners LLC. Ties between Prime membership and Whole Foods will make those stores a more standard destination for these shoppers. Every supermarket and drugstore hands out loyalty cards or asks customers to sign up and shop more. Mostly customers ignore these when deciding where to buy. Not Prime customers. Prime customers are very suggestible and lettable, extremely loyal and spend a lot more at Amazon than others, Levin said. About 63% of Amazon customers in the U.S. have Prime and they spend $1,300 a year on goods from the retailer, compared with $700 for non-members, SERP estimates. They purchase from Amazon 25 times a year on average, 11 more visits than non-Prime customers. The company won't say how many Prime members it has, although SERP put that number at 85 million in the U.S. As of June 2017, about a quarter of the country's population. Wall Street analysts once fretted about the cost to the company of Prime's free 2-day shipping. Now it's the goose that laid the golden egg, and Amazon wants it to nest right next to Whole Foods' cage-free brown eggs. About 60% of Whole Foods shoppers are already Prime members, SERP estimates. This still leaves millions of new members to lure through those new in-store deals and the loyalty program. But the biggest potential gains will come in Whole Foods stores, Levin and others say. It's an opportunity for Whole Foods to capture more wallet share of its best customers, provided the program has the right components and you really get rewarded for shopping at or visiting Whole Foods, said Sucharita Mulpuru, a retail industry analyst. Amazon's new physical bookstores have Prime tightly integrated into store transactions and they have a distinct pricing structure for Prime customers, she noted. It doesn't even make sense to purchase in an Amazon bookstore unless you have Prime, Mulpuru added. I doubt they'll be quite that drastic with Whole Foods, but I do think they'll incentivize shoppers quite a bit to associate their Prime account with their Whole Foods transaction. In one fast-moving day on Wednesday, Whole Foods shareholders approved its merger with Amazon and the Federal Trade Commission gave the merger its stamp of approval. Amazon then announced on Thursday that the merger would close on Monday, August 28, 2017. More importantly, Amazon announced that, immediately following the close of the merger, prices will begin to drop on a selection of Whole Foods' most popular items. The transformation of grocery shopping is accelerating and the key trend is not lower prices, but cross-platform selling. Amazon's press release mentions price cuts on Whole Foods staples. Amazon Prime is a rewards program for Whole Foods customers. Whole Foods private label products being sold through Amazon.com, Amazon Fresh, Prime Pantry, and Prime Now, and Amazon lockers located in Whole Foods markets. Most people will focus on the lower prices, but we all should have been expecting those. The new information is more details on cross-brand leveraging and new synergies about which we had previously only been guessing. The two big parts of the announcement are the cross-platform selling that is planned in both directions. First, at least in terms of likely rollout, many of Whole Foods and store brands will soon be for sale through Amazon's various outlets. For dry and canned goods, this makes perfect sense and will allow Amazon to sell a premium product at higher volumes than Whole Foods was likely to accomplish on its own. It also allows Amazon to capture more of the value in the supply chain through vertical integration, as it now can capture some of the profit from the food processing step instead of being just a retailer. Retail margins, especially in food retailing, are very low. Supermarkets average only a 2% profit margin, so moving into higher margin businesses is good news for the long run profitability of Amazon. Second, and as I predicted earlier, Amazon will also sell cross-platforms in the opposite direction. Shoppers will be able to make purchases online and pick them up at a Whole Foods market. This feature will be available as soon as Amazon can build some of their lockers in physical Whole Foods stores. This will allow us to buy staples and home good products at the low prices available on Amazon.com for items where we are searching mostly for value. Purchase items where quality is important and variable, such as produce, meat, and seafood in person at Whole Foods, and then leave the store with both sets of purchases. This is quite likely the future of online grocery shopping, as the long line of bankrupt online grocery sellers testifies to. Consumers want to see and touch at least some of their groceries to ensure the quality what they are looking for. We want our bananas a certain ripeness and to see the fish is fresh. Yet we also like the low prices delivered by avoiding the upkeep on a physical store for many items that we are comfortable purchasing sight unseen, breakfast cereal, laundry detergent, etc. Rather than forcing consumers to accept a trade-off between these two channels for grocery shopping, the Amazon Whole Foods merger is promising to create a hybrid. Many commentators are going to focus on the announcement of lower prices at Whole Foods stores, and competing supermarket companies saw their stock prices drop on the announcement, but low prices were already available as nearby as the closest Walmart or Aldi. Yet, Walmart had not driven other supermarket brands out of business. A significant majority of grocery shoppers care about some features other than price, or Walmart's market share would be even larger. The big news here is confirmation that Amazon sees this merger as an opportunity to merge two food retailing channels into a single, more seamless, shopping experience. I suspect that over the next couple of years, this will be the biggest impact of this deal. The ball is now in the court of the other food retailers to figure out a way to match this ability to offer more products for sale in multiple ways so that whatever the customer wants, the customer can get, even if that means buying some groceries online and the rest in person. Amazon will force every retailer to think harder about all the channels we use to buy our food. Amazon moving swiftly to cut prices at Whole Foods. The e-commerce giant is saying, starting next week, it will cut prices on bananas, eggs, salmon, beef and more when Amazon completes its $13.7 billion takeover of Whole Foods, helping Whole Foods win back customers who found good enough organic and natural products elsewhere, possibly at a lower cost. Fits Amazon's track record of keeping prices low to lock in customer loyalty. Looking ahead, Amazon hopes to give members of its Prime program special savings and other in-store benefits. It's an opening salvo in the grocery wars, said Neil Saunders, managing director of Global Data Retail, and shares of other supermarkets fell sharply on the news. Rivals should be under no illusion that they are now dealing with a competitor that is not afraid to damage profits and margins if it creates long-term gains, Saunders said in an analyst note. Amazon's aggressive push into the grocery business is already having a financial impact on competitors. The stock prices of Kroger, the nation's largest grocery chain, Walmart, Costco, SuperValu and other retail outlets that sell groceries dipped on Thursday as investors weighed the impact of Amazon's announced plans for Whole Foods pricing. Among other Whole Foods items getting discounts Monday, avocados, tilapia, baby kale, apples and rotisserie chicken, all organic, Amazon said. The company also said certain Whole Foods products will be available through Amazon.com, Amazon Fresh, Prime Pantry and Prime Now. The pricing changes are likely to mark the first of several pricing tweaks, said David McGee, an analyst with SunTrust Robinson Humphrey, in a note. Amazon's announcement comes a day after Whole Foods shareholders gave their approval and the Federal Trade Commission said it would not block the purchase. Amazon will pay $42 per Whole Foods share, an 18% premium from its price the day before the tie-up was announced June 16. The stock edged up to $41.98 on Thursday. By buying Whole Foods, Amazon is taking a bold step into brick and mortar, With its more than 460 stores and potentially very lucrative data about how shoppers behave offline, the grocery chain had been under shareholder pressure to improve results as customers moved on and discount chains like Lidl and Aldi expanded in the U.S. Whether Amazon will succeed in the fiercely competitive grocery segment is unclear, but customers are going to benefit from the attempt, said Charlie O'Shea, lead retail analyst at Moody's Investor Service. Amazon can come in and price items very low, he said. Its shareholders are agnostic about profit, and seem more interested in revenue and market share. That's a competitive advantage. Rivals have been scrambling to catch up with the e-commerce giant, Walmart, which has the largest share of the U.S. grocery market, is expanding its grocery delivery service with ride-hailing service Uber and announced Wednesday that it will join forces with Google to let shoppers order goods by voice on Google devices. While Whole Foods accounts for less than 3% of U.S. grocery and supermarket sales, the purchase gives Amazon a foothold in a fragile industry that can ill afford more price cutting. Lower prices could be catastrophic for some operators, said Madeline Hurley, a senior analyst at market research firm IBISWorld. It could drive them out of the industry. On average, she said, supermarkets only squeeze about $1 of profit out of every $100 in revenue. Hurley said she is not sure how big competitors like Walmart will fare, but that Amazon is showing a determination to shake things up, and fast. There was a lot of speculation that Whole Foods might be left as more of an independent entity, at least in the beginning phases of the acquisition, she said. This shows that Amazon is taking a very hands-on approach. Financial analysts say one challenge for Amazon is how to cut prices and broaden Whole Foods' appeal without hurting the chain's image for quality food. It's a tricky balance that Amazon itself seemed to acknowledge in its statement. Everybody should be able to eat Whole Foods market quality. We will lower prices without compromising Whole Foods Market's long-held commitment to the highest standards, said Jeff Wilke, CEO of Amazon Worldwide Consumer. Earlier this month, Amazon sold $16 billion of bonds in order to pay for the purchase. Its shares were down 0.6%